Compared to Palantir stock, which closes at 1.15%, Tesla closes at 6.63%. On which of these are investors willing to take a financial risk? Do you believe that purchasing Palantir is a better investment than Tesla stock? Find out as we discuss, is Palantir stock a good buy? Why buy Palantir stock over Tesla stock? On May 9, Palantir stocks, currently trading at 4.30%, dropped 21% to a record low following the analytics company's release of its first quarter financial report. As revenue climbed by 31% over the previous year to $446 million, analyst forecasts exceeded $2.5 million. However, the adjusted net income decreased by 46% to $45 million per share, missing analysts' expectations by $0.02. According to generally accepted accounting principles, the business's net loss dropped from $123 million to $101 million compound annual growth rate, GAAP. It is very surprising that as Palantir dropped following a financial report, it has undergone the necessary checks and is up and doing. Let's look at that shortly. Palantir anticipates revenue to increase by 25% year-over-year in the second quarter to $470 million, missing the consensus estimate of a growth rate of 29%. This would be the company's slowest revenue growth since going public. Nevertheless, the business remained committed to achieving 30% annual sales growth through 2025. Talking about commitment, hit the subscribe button below. Investors were alarmed by Palantir's mixed results, and a closer look reveals several urgent issues. Let's examine whether Palantir stock is still desirable to purchase at these low prices. Imagine putting your money into a venture with no plans to make a good interest rate. Then why invest? Palantir's revenue from clients in the government accounted for 54% of its total during the first quarter. Commercial clients accounted for the remaining 46%. With a reputation as a somewhat enigmatic big data analysis software supplier for governmental organizations and major enterprises, Palantir went public in 2020. Due to this, Palantir's direct listing remained largely unnoticed, allowing investors to purchase shares in the company for less than they would have otherwise. BTM was able to seize this opportunity back in October, when the share price was about $9. However, institutional and retail traders' great interest in Palantir caused the price to rise to roughly $45, making it an unattractive investment before the conveyance of this idea to the larger SA investor community. Palantir has now undergone a necessary repair and stability and is once more appealing. We believe Palantir is being fearful here. As Warren Buffett said, "Be fearful when the markets get greedy, be greedy when the markets get fearful." Palantir's financial performance is also outpacing projections, thus developing a new Palantir valuation on this note. Palantir stock is not only favorable to invest in, but it also is a defense contractor, which we will detail in a bit. Due to the vast amount of study that has been done on Palantir, this company is now well recognized by the majority of investors. Let's not go into great depth about the company in this note. If you didn't already know, Palantir is a rapidly expanding defense contractor that provides two software platforms: Foundry, a cloud-native SaaS central operating system for data, and Gotham, software for defense and intelligence analysis. By facilitating better real-time decision-making with the aid of big data analytics powered by artificial intelligence machine learning (AI/ML), these systems enable government organizations and businesses to tackle problems such as people trafficking and money laundering. With a market cap of $900 billion, over $50 billion in trailing total market returns TMR, and a trailing 12 months TTM revenue multiple of roughly 16, Tesla is the fifth most valuable U.S. company. This is due to its great 65% year-over-year YoY growth rate. There is practically no other company with a large market cap growing this quickly. For several years, Tesla is anticipated to achieve a 50% compound annual growth rate CAGR yearly growth rate. However, you have to pay more for it. Although Tesla is not priced perfectly, execution is crucial. just like any high-growth business whose earnings are projected based on that growth. Today, Tesla is recognized as a tech giant for its successful past operations and likely future, while Palantir is trading with a market cap of $25 billion, $1.5 billion in TTMR, a 16 TTMR multiple, and a compound annual growth rate of about 35%. Due to its stock-based compensation being above the current industry average, Palantir is not profitable under generally accepted accounting principles GAAP. Although free cash flow is favorable, true profitability is still a few years away. It's important to note that Tesla spent over $2 billion on SBC and over $1 billion on Palantir. Still, that expenditure was non-cash and increased stock-based compensation in SBC share count rather than causing a company to go bankrupt. Furthermore, Palantir is debt-free and possesses a few billion dollars in cash, according to that perspective. Not the kind of financial structure you might anticipate until you realize that Palantir is attempting to preserve the vitality of some of the most important institutions in the world. Palantir is a software firm of the greatest class today, with a constantly growing order book, the backing of the most influential organizations on Earth, and the ability to attract and retain the brightest minds. A reason to choose Palantir stock over Tesla stock. Palantir is still working to establish its viability, though. If you're confused about why Palantir stock is a buy over Tesla stock, watch our video titled Palantir versus Parsons. Which stock has better value option now?